Hey, what's going on, everyone? Welcome to the Genuine Learning Blog. I am Peter Zender, and today we're going to take a hard look at the accounting for software. That's right, we're talking about the new proposal to accounting for internal use software from the FASB. Let's get after it and start with the why. Why is this proposal happening? Well, the process for developing software is changing. The sequential, staged processing of software development is exiting stage left. Instead of stages, development is trending toward agility, adaptive planning, short 1 to 4 week development sprints that allow for responses and feedback to be collected from internal users and external users along the way and tweak the development process as needed. The proposed accounting updates are aimed at aligning this change in the development process to how we account for internal use software. And then, of course, we're getting a little sprinkle of some transparency updates for users of the financial statements as well. But before we get to the changes, let's do a very brief review of the current concepts of software accounting. So software costs include acquiring, developing, or modifying software. On one side, we have external use software. This is, as I'm assuming you could guess, is when software is being sold externally, right, to a customer, likely through a large one-time charge or through a subscription fee of some sort. On the other side, we've got our internal use software. And again, I'm guessing that you can guess this, but this is software that's used internally. Think of things like employee time management systems or project management software. Now, under the current guidance for accounting for internal use software, it's really easy to get bogged down in the complexity around when we can capitalize costs and when we can't. And the reason for this is not only do we have to determine the thresholds for capitalization, but I've also got to assess an extra layer of complexity around what stage I'm in. Am I in the preliminary stage, the development stage, or the post-implementation stage? Basically, we're playing 3D chess when checkers would probably do just fine. On the other hand, external use software accounting only has one threshold for cost capitalization: feasibility. You expense costs before feasibility, and then you can consider capitalization of eligible expenses after feasibility is reached up until the release date of the software. And this difference between internal and external use software accounting often leads to confusion and lack of clarity on software cost treatment and decision useful information within the financial statement. So the goal of this FASB proposal is let's get internal use software accounting simplified and down to one capitalization point similar to external use software accounting treatment. So this brings us to what is included in the proposal. So like I mentioned before, the proposal says, let's remove those development stages. No more preliminary development and post-implementation stages. They're gone. They're out of here. Instead, we're going to streamline and clarify that there is one key threshold point with two key attributes that must be met for internal use software cost capitalization. The first attribute, management must authorize and fund the project. The second attribute, which is a little more difficult, is completion and intended use of the software must be probable, likely to occur. And there's some judgment associated with that. We have to evaluate if there's any sort of significant development uncertainty. And how do we do that? Well, we've got to make sure that there aren't any features that we have yet to prove the feasibility of. If there's software features that we aren't 100% sure if they're going to work or not, right? We can't have those. And then we have to make sure that the performance requirements of the software are locked in and the plan for the software is fully formed. That's how we can kind of assess and overcome that uncertainty. So in general, if management has given us the cash and we have the approval from them to move the project forward, the software development project forward, and the development plan is clear, feasibility is not a problem here, then we can begin to assess software costs for capitalization. That's kind of a summary of the first 3 points here on this slide. Now, if I go down to the bottom, we've got a cherry on top of this Accounting for Software Sunday, where around presentation and disclosure, we are also going to get a transparency bump and specifically and separately call out capitalized internal use software costs as investing cash flows on the statement of cash flows, giving those financial users the clarity that they so rightly deserve and need, right? Okay, I included this slide in here because I just think it's interesting to look at some different alternative approaches that the board considered. The first of which is a single model. So for the single model, both internal use and external use software accounting would be the same, which is kind of interesting, right? It kind of removes and hopefully improves the comparability of the two. However, this was ultimately rejected due to the fact that the generalization of standards that would have been required to make this happen were feared to kind of increase judgment and then ultimately reduce the comparability, which I don't know, it was kind of counterintuitive. But anyway, the single model was rejected. The second one, which I think is even more interesting, is the board considered an expense all model, where basically all the expenses incurred to develop software would be expensed. There would be no capitalization happening, which I think would have really simplified things a ton. But ultimately, this one was rejected as well, a big Dikembe Mutombo finger wag, because stakeholders wanted to continue recognizing components of the software development process as assets on the balance sheet. So for now, we continue on with our dual model approach, but interesting to kind of take a look at some of the different considerations that were included in the proposal. A few quick notes and some extra goodies from the proposal. Website development costs. So currently, website development costs have their own capitalization guidance at 350-50, but because websites are now used a lot of times as an access point for underlying software, the argument has been made that these should just roll under internal use software guidance at 350-40. So that's called out within the proposal. The second bullet point there, unit of account. There are situations where software is embedded in hardware that's been recorded as PP&E, and entities often account for those software costs as one unit of account included with that hardware, and again, recorded to PP&E. So questions were raised on whether that software should be split out and assessed separately. Ultimately, the board clarified you just need a reasonable and consistent method to be applied when running into those types of situations. The last bullet point down at the bottom, private companies have no alternative accounting proposed. I wanted to call that out because the expense all method, I think had some promise here as a practical expedient, but alas, the desire to keep those assets on the books outweighed the accounting simplicity that could have been gained. All right. If any of these items were triggering to you in any way, if you had any concerns, any thoughts that you wanted to share, the FASB is seeking responses on the clarity and operability of the proposed amendments, decision usefulness of some of the new guidance, specifically around those cash flow presentation requirements, transition and effective date preferences. So when do you want this new guidance to go into effect? And then if there's any impact on specific areas or types of companies, organizations, or entities, they want to hear your feedback. Comments are due very, very soon, though. They are due January 27th, 2025. We are going to put a link down in the comment section to the proposal, and that will have instruction as to how to provide any commentary that you would like to the FASB, to the board. But with that, that is our blog on accounting rules for internal use software and the changes that have been proposed. Hopefully we've debugged these accounting updates for you, and I appreciate you taking the time to listen. Happy debiting and crediting, everybody. Take care.